Hello and welcome to TA for Traders. It's Wednesday the 27th of September. I'm Nigel Croft. In this video we'll be looking at 2 UK stocks and 2 US stocks. In the UK we're going to start with Hotel Chocolat, which has come out with figures. We're then going to look at a big mover this week, Tullow Oil. Is it at resistance? Then in the US, we're going to look at Catalan, which has come out with a secondary offering overnight. It priced at 39.1. It was 250 million in size, and the pricing was at a very narrow discount to the previous close. On the chart there, we'll see that it's got to avoid filling a gap. And then finally, we're going to look at Facebook. Now the tech stocks this week have had a bad week in the US. We did look at Apple on Monday. Today we're looking at one of the other FANG stocks. We're looking at Facebook. It has fallen. What's going to happen to the charts? Let's look at those charts. Okay, so starting with Hotel Chocolat. And you can see that the last 3 days has all been positive, running into the figures. And today we are still up, which is good. Although it is a red candle. Don't worry about that. And the fact we had this hammer yesterday, don't worry about that. That's been nullified with today's move. If that been a top, that would have been a difficult picture, a negative picture. We've moved back above the 20 and 50-day moving averages, which is good, and the RSI and MACD are indicating positive momentum. Now, the next resistance level is at 320. I would still be saying we are still in the downtrend, but if we can get up to test that support, it would be good. That level is 8% above the present market, so it's got the momentum to get up there, and that's a good move. So I think definitely stay with Hotel Chocolat. It would be very positive also if we get above the 200-day. That's at 308.64, and that could give the impetus to test that resistance at the 320. 320 level also is resistance level on this weekly. You can see the downtrend in 20-week moving average is at 322.5 and coming down strongly. If we were to carry on this rally over the next 2 or 3 days and get to that 320, then we would be up against that 20-week, which will probably cause the resistance that's going to halt the advance. On the RSI and MACD, not such a positive picture from the weekly, although the RSI has just broken its downtrend, but it is still below 50 at 48.19, and the MACD are still tracking down and are below zero, although the shorter term is now flat lining. On the 4-hour, you can see we've broken up through the 20 and the 50 averages, which is good. You can see we've got very solid momentum, and on this chart there's nothing to stop the test of the 320 resistance. Okay, moving on to a good mover this week. That's Tullow Oil. You can see it's risen from 158 all the way up to 196. I would be getting cautious at this level. You can see that we're nearly up against the downtrending 200-day moving average. That's at just above £2, £2.66. And you can see that on the RSI we're overbought. It's at the highest level it's achieved this year, 74.43. That is a good sign of upside momentum, but I just think it's just got ahead of itself slightly. And the MACD are showing that positive momentum. It's just, to me, we've run too far away from the 2050. Yes, they have created a golden cross as the 20 crossed the 50 yesterday, but we're too extended, and with that 200-day, I would expect a drift back from here. Looking at the weekly, and you can see that they were nearly immediately up against the downtrending 50-week moving average, which is at 206. That's still downtrending. You can also see that back in April we've got a lot of work to break through, a lot of resistance points. So that's again indicative that this rally, I would say, is not going to go much further. RSI is back above 50, positive momentum, and has been higher, so be aware of that. And the MACD are actually just starting to flash a buy, but we do need to break that resistance of that 50-week before this picture would improve. And on the 4-hour, you can see the breakup we had a couple of days ago. That's left a gap. Keep your eye on that. It will be very bearish if we came back below the 185 level, because that would indicate we are going to fill the gap back down to the 178. All the moving averages are now moving up, which is good. They'll give support on any consolidation. Again, the RSI is showing overbought. Excuse me, 84.3, although the MACD are positive. Right, moving across to America, Catalent, code CTLT, had a secondary, priced very narrowly, priced at 39.1, so that's obviously a key support. Now here you can see that we did have a gap created on the 29th of August. If we fall below the support at 38.21, you will see that gap filled. So it's very important that over the next couple of days we bounce back up, start to create an uptrend here, really break above this 40, above 41, and start to push up. Because if we do come down and test that support, there's a chance that this gap will get filled. The RSI is indicating slight negative momentum, although it is marginally above 50, and the MACD as well, negative momentum, so that they need to turn around. This support needs to hold, and just keep watching this picture. On the weekly, obviously you can't see the gap isn't as apparent on this weekly. It just looks like we're slightly overextended from the 20 and the 50, so be aware of that. The RSI is flat lining. We did have a non-confirmation on that RSI, but the MACD are still short-term above long-term, so still marginally positive. And on the 4-hour, here you can see the drift down towards the supports, finding support at the 54-hour, which is good, but the RSI has in its downtrend gone back below 50 at 44, and the MACD are down as well. So really this 50 needs to hold over the next 5 or 6 periods of 4 hours, or we could see that this downside momentum started to test the supports. And finally, moving on to Facebook, fell quite heavily yesterday. Most of the tech stocks not having a good week. It's fallen below the support of the 20 and the 50. We've now seen the downside momentum accelerate. It looks like, it's a drifting pattern on the RSI, which is always bad. There was never a strong amount of momentum as we pushed up. We've now broken down. RSI is at 38.2, indicating negative momentum, as is the MACD, which started to signal a sell on the 14th of September. For any upside, we need to get back above that 50-day very quickly, but it looks vulnerable now. We're below there. Maybe a consolidation here, then the 20 will cross the 50, and that could give a push down to the support at 160, with support below there at in the 153 to 148 level. On the weekly, not such a bad picture, although momentum has been lost. We're finding support at the 20-week moving average, 161.45. That did hold yesterday, so be aware of that. RSI has cracked down, but it's above 50, but the MACD is flashing a sell signal, so see if this 20-week holds. And finally, moving on to the 4-hour, here you can see we've had a bearish cross as the 20 has crossed the 50 moving down. That's opposed to last week when there was a golden cross, but as I said, there was no upside momentum, and in fact there was a non-confirmation on the RSI soon after that, so you wouldn't, even after that bullish sign, you wouldn't have been rushing in to buy it. Now let's see what happens. We reached a low on the RSI of 25.8, presently at 33.3. So if we do come off again, let's see where that bottoms. This could be a potential first sign of a bottoming picture if the RSI doesn't go below that 23.6 level on the next downswing. MACD very low on the short term, starting to get oversold, negative 1.63. So that's been TA for traders. In the UK, looking at stocks in the UK, we looked at Hotel Chocolate and Tullow Oil, and then in the US we looked at Facebook and Catalan. Thanks for watching. I hope you found the video of interest. Sorry if I said that share the wrong name, that Catalan. CTLT is the code if you want to find out how to really pronounce it. Please remember, these videos are for education purposes only and are my opinions, and please read the disclaimer, and because these are not investment recommendations.